Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, October the 26th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters, I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. Having all that out of the way, let's get it on with some economic data. Not really anything major across the pond. We did get the ECB press conference going on, nothing seen there. But here in the United States, we got unemployment claims came in at 233,000, expected to be 235,000. So pretty much in line with expectations. We got preliminary wholesale inventories month over month came in at 0.3%, expected to be 0.4%, and they revised last month's number down to I believe it was 0.9%, and I think it was well above that. Then we got pending home sales came in at unchanged, expected to be an increase of 0.2%, and then they revised last month's number down from negative 0.6% to negative 2.2%. A little bit of a revision there as well. And then we got natural gas storages came in at 64 billion cubic feet, expected to be 61 billion cubic feet. And we got University of Michigan consumer sentiment came in at 100.8, was right pretty much in line with expectations at 101.1. So pretty much in line. And then advanced GDP quarter over quarter came in at 2.6%, expected to be, oh, actually, we haven't gotten out that's for Friday. Friday we get GDP numbers. Looks like they already revised last month's number from 2.6% up to 3.1%. So into the threes is a pretty big move for that GDP number. So that's going to get the FOMC maybe speeding up the process of increasing interest rates. So we'll have to keep that in mind as well. Onto the overall markets, we've got crude oil moving a little bit higher today, albeit it was down earlier this morning, and it kind of shook me out of my XOP, which I'll talk about here in a little bit. But crude oil back up into positive territory. Gold futures coming off. You know, they were pushing higher yesterday, trying to test getting back above this value Fibonacci level into the point of control. It did do that. Late in the day, though, we saw the equities really rallying and continuing on today. They ended up, pretty much in negative territory for the most part. But today, with the move back, we're seeing gold futures really start to fail. And again, I see gold futures going down to the 1250 area. So onto the bonds, not a whole lot of room for the bonds to move unless we start seeing a lot of rhetoric coming out of the FOMC. This 151 area is kind of its sweet spot, unchanged right now. Was just 29 bid at 30 or 31 bid at even is what we used to say. The 51 handle, 31 bid at 51 even. So that's how you arb that one if you want to play around with that. This is what we were talking about yesterday when we were doing the daily market commentary. VIX was up into the 13 handle, kind of a normalized for historical purposes, but in the last year or two, it's been relatively, toggling back and forth between that 10 double digit and single digit area. But yesterday's rally really took all of the volatility out of the VIX. I was getting a little excited, a little ahead of myself, I guess, thinking we were going to start seeing some volatility, but not with today's move. As you can see, yesterday, Dow came off of its low. At one point, it was close to down 200 points. Today, up 60 some odd points right now. Sorry, having really trouble seeing today. This is what I'm looking at with the NASDAQ. Yesterday, it extended its downturn after our daily market commentary, but then somebody flipped the switch and it turned around on a dime. Today, NASDAQ slightly in negative territory, but still a positive for the most part. It's a bit of a mixed bag, as you can see with the E-mini S&Ps positive on the day as well by a few ticks there. This is the move I was talking about yesterday when we did the daily market commentary. We were kind of right in and around this area, and as soon as I got done, it really pushed to the lows. Then we started seeing an immediate turnaround right after that. Today, pretty consolidated for the most part, and one could almost consider it an inside day, but I'm not going to. As you can see, the value area high is here, the value area low is here. It lines up a little bit higher than that, actually. So, but just a quiet day for the most part, but pushing higher by about 4 points. All right, XOP, this is what I was talking about with XOP. When crude oil was coming off, I kind of threw in the towel. Yesterday, I was looking at this trade. If we can see, I'll blow it up a little bit. This looked like it was a bottom, and, you know, without saying this doji here, was looking for this 50-day moving average to act as support. Yesterday it did. And then I thought if we can break above this, I'm going to stay in this trade. But if I get below yesterday's low, I'm out. And one tick below it, I decided to pull the ripcord on that trade, which was the XOP. I had both in my IRA and in my margin account. In my margin account, it was basically the same trade. I was long the November 32 calls and short the 35 calls, and I originally paid just over $2 for that, or sorry, just over $1 for that trade. I paid $1.65, got out for 60 cents, and sure enough, it bounced and went back above that area. But you know, you never know. Hindsight's 2020. That's why you don't cherry pick these trades, you guys. Like, just show you my winners. I go through all of them, the winners and losers, and how I go through that. That was a pretty solid exit. Basically, my call spread was out of the money, and you know, I just decided to pull it because it broke down technically. So although we're seeing a bit of a bounce, in that 50-day moving average is kind of holding it up now, you don't know when you're putting on the trades or taking them off. And in this case, you know, when it broke down into that, I think it was 31.71 was my area where I was looking that I was going to pull the ripcord on it, and I did. All right, AMGN. Now, this is a trade that I put on. I tweeted this out yesterday on Twitter that I was putting on a strangle in here, and I only did these trades in my margin account. My IRA, I couldn't set it up, and the way I was looking at the defined risk strategy, it was just too margin intensive, especially for something like AMGN to put into my IRA. So I just didn't do it. So on the open, though, this market was really selling off, and pre-market, it was trading down around 167, I think it was, which made my puts really not looking very good, because I had on the October and sold the 185 calls and sold the 170 puts. So those 170 puts were in the money, and it was not looking very good. As soon as the market opened, though, you can see the low. Let's see where the low is on the intraday. You can see 169. So those 170 puts were in the money. I put this order in right after the open for trying to get out of it for 80 cents. I sold it originally for $1.09, bought it back for 80 cents. Obviously, had I waited, I probably could have gotten out of that trade today for, you know, somewhere around 45 cents, maybe 50 cents. So I could have done a little bit better, but you never know. I mean, that market could have popped up and slammed down. Like I said, I like to cover these immediately on the open. And this one, I waited just a little bit for it because those puts were in the money. And just as soon as those puts went out of the money, I decided to get out of it. And it went straight to where we are now, almost 175-ish minutes afterwards. But, you know, I wasn't going to take a dead cat bounce. And what we call a dead cat bounce is market slams down, you get a bounce, and everybody thinks, woohoo, we're out of the woods, and then all of a sudden it slams down. So I got out of this. Basically, they beat on their earnings per share, as you can see there, but they missed on their revenues. And one of the major things that kind of spooked me in a sense, and I think the overall market, was that the reason why they beat on earnings per share was because they cut back on R&D, research and development, and somebody like a biotech, that's not good. They need to keep reinventing themselves, especially because AMGN's in a situation where a lot of their patents are coming up, and they're not going to be able to have that stronghold in the market, if you will, on some of those drugs. So, going forward, that doesn't look very good for them, and that's what the overall market was looking at overnight. We're getting that bounce, maybe because of the headline earnings per share number. I'm not really sure, but that was enough for me to pull the ripcord on AMGN, and I would actually, going forward, be more bearish on AMGN in the future. All right, so Las Vegas Sands, they came out of the gates looking really good. Market spiked higher. We're kind of rebounding a little bit, but with Las Vegas Sands, I got in there and had sold the October 60 puts, and I originally sold those October 60 puts for 33 cents, bought them back for 8 cents on the open, and as you can see, the market did slam down throughout the day and would have come very close to it. But when I was setting up this strategy, I looked at this as being a support, this bottom here on this one, and that sure enough came down and really tested it. I probably should throw a Fibonacci on there just to see what, that's going to give me a Fibonacci extension, I believe. So let me just kind of fiddle with it that way. So very close to a fib, 61 fib level, but that is acting as the support. I would have to say I'd try to play around with that to get it to line up with that a little bit more, because that seems to be more of the support area, and that's where it came down, and buyers came in strong. So, but off the open, as you can see, as soon as the market opened, we were quite a bit higher, and I was able to get out of that trade relatively easily. As a matter of fact, I wasn't even worried about it. I was watching the AMGN. As soon as I covered the AMGN, I went over and covered this Las Vegas Sands, which is LVS. All right, and then Twitter. The only reason why I have Twitter on here, I didn't do a trade on this, because if you follow me on Twitter, I actually tweet out all of my earnings trades late in the afternoon when I put those on, because I haven't really set up for those. I know which ones I'm going to be kind of looking at, and I'm going to watch those throughout the day, but I like the clean number at the end. And if you watch those earnings webinars, you will know exactly where my strike location is. So you need to watch those videos. That's really important, and all my rules in and around earnings. But the only reason why I pulled this up is because Twitter beat earnings. Believe it or not, they haven't done that in quite some time. So spike to the upside there, and leads into the follow me on Twitter, because that's where you're going to get these earnings trades. All right. Also, tomorrow we're going to be doing the put calendar, and this is great for setting up for the next earnings cycle. And the reason why it's great for that is because we get volatility expansion heading into these binary events, and a binary event is just a known event for a particular underlying. It could be the FOMC, which would affect Fed funds and bonds. That is a binary event for those type of things. And the bank stocks for that matter. But having said that, we get volatility expansion going into those. Cover that put calendar before the earnings happen. As a matter of fact, I might even be looking to set up a put calendar in AMGN, because I'm going to be bearish on AMGN going forward. So that might be a good setup for that. Get a volatility expansion going into those earnings, and cover it right before that when you have the highest amount of premium. All right, so check it out. I'm going to go through all those rules and explain how to set that up to increase your probabilities of success. I know you can go online and look how to do a put calendar, but they aren't going to tell you the right environment and the right strike locations and things of that nature, and how to set these things up to increase your probabilities of success like I will. All right, so if you can't take that, take it easy.